Hey traders, and welcome to the trading channel. In today's video, I'll be showing you guys the analysis that went into the trade you see on your screen on the pound yen. And I'll be showing you guys exactly how I got involved in this trade when it started as a breakout, but I decided to get involved before the breakout actually happened. I'm going to take you guys through the entry reason why I decided to do that and the analysis that led me to believe this market would be dropping very soon. If you're brand new here to the trading channel and you enjoy free educational content about Forex trading, then make sure to click that little subscribe button and click the little bell to be notified whenever I come out with new free educational content about Forex trading. If you'd like to learn more about how you can catch breakouts and make up rules for a breakout strategy that you can use before the breakout even happens, then make sure to keep it locked here through the intro and disclaimer, and I'll be right back to talk to you guys a little more about this pound yen trade. Alright guys, to start off with, we're going to look at the daily chart here on the pound yen. And do you guys notice anything about this chart that would lead you to believe the market may fall? If any of you pointed out this level of resistance over here, then you would be correct. That was my thoughts, is that this market has now pushed up into this level of resistance, major level of resistance that was respected before between the 148.42 area and 1.4719 area. Since the market has pushed into this area and then been pushed directly back down by well over 400 pips now at this point, that leads me to believe that that's a major level of structure and this market may continue to fall for a while. And with my expectations being that this market makes it at least to here and possibly even down even further to here, I had reason to believe that this market had plenty of room to move to the downside because at this point we had already broken below this level of resistance here. So with daily structure coming together like that, I decided to go ahead and drop down to a smaller time frame and look for an actual strategy, and that's what I'm going to share with you guys today. So let's go down to the 4 hour and take a look at the other aspects that led me to believe that the pound yen was going to drop. We have a move up into a daily structure level in red here that you see, and then we have a reversal signal, guys, and a reversal signal for me is pretty simple. I wait for the break of my first structure support level when I'm in an uptrend. So if I'm in an uptrend, I'm waiting for the market to create a support level, then break through that support level. And that's what signals to me that this market may be ready to reverse trend. This market's been in an uptrend for a while here on the 4 hour chart. So that means the market is somewhat exhausted and ready to take a little break, possibly even reverse trend for a little while here on the 4 hour chart. And as you could see, even if we reverse trend here on the 4 hour chart, we still have a while before we hit structure on the daily, which is going to be my very important levels of structure that I expect the market to go between. So that would be the pre-analysis behind the actual trade. That's the analysis I do on my higher time frames in order to get ready for the strategy that I used in order to get into this trade. And now for the conditions and entry reasons here on a lower time frame on the 4 hour chart, simply put, I was waiting for a strong move down like this one here, and then the creation of a flag, triangle, or pennant. And as for an entry reason, I wait for 3 tests of the original resistance level, and after the 3rd test, I trade a close below candle. And guys, close below candles are very simple. Let's say this is a green candle. Sorry, I'll change the color of that candle here in just a second. Let's say this candle is a green one, then I would be looking for a close below candle that looks something like this. As you can see, this candle closes below the previous wick or the previous low of the previous green candle. Once that happens, that's my entry after the 3rd test of a resistance level while a flag, triangle, or pennant is being formed, and that's exactly how I got involved in this specific trade. And guys, I really don't like when professional traders post trades or post strategies on courses or even here on YouTube with very subjective rules. And one of the most subjective rules of this strategy would be looking for a big move down and then the creation of a flag pattern, right? I'm sure a lot of you have dealt with this before where in your strategies your rules are too subjective to follow consistently, and what I mean by that is, for the example of this strategy, what would classify a big move? What if I had 4 candles that dropped half this amount? Would that be a big move down? Because unless you have rules like that, then it's going to be very hard to consistently trade a strategy. And of course, there are a number of other examples of subjective parts to a strategy. For instance, where can I draw my lines on a flag pattern? Do I draw the lines on the wicks of candles? Or do I draw the lines on the bodies of the candles? And for this rule, you can do either one. You just have to be consistent. You either need to consistently draw them on the wicks of the candles for the trend lines of your flags, triangles, and pennants, or consistently draw them on the bodies. And these are the kind of rules that most traders never take the time to create or learn. And that is one of the main reasons that most traders cannot stay consistent with a strategy. And guys, if you're one of the traders that's having trouble creating a consistently profitable, non-subjective strategy, then I offer some very simple alternatives and videos like this here on YouTube where I show you guys techniques on strategy creation, and I also have a number of different rules-based trading strategies that I teach in the EAP training program. And what I'm going to do is leave a link to that program in the description and in the top right hand of your screen. So if you'd like to learn more about that, then click those links. And otherwise, let's get back to this pound yen trade. As I was saying, guys, you could create non-subjective rules for both of these. We just talked about our trend line for our flag and triangle patterns. So you need to be non-subjective whether or not you're going to place the trend line on the bodies of the candles or on the wicks of the candles. And as for the big move down, you can use rules such as, I need a move down that's a certain number of pips. Maybe you need a move that breaks structure. So we talked about this earlier. This move did break through this support level. So maybe part of your rules could be, I need a move that breaks through a support level with at least a 100 or 200 pip drop on these pairs with larger ATRs like the pound yen. So maybe you need at least a 200 pip drop and the market to have just broke below a support level. And just like that, guys, you have a non-subjective way to trade breakouts. Now you know exactly what you're looking for. Now you know every time you're looking for the market to come off a daily level of structure, you're looking for a drop of at least 200 pips below a previous level of 4-hour structure, and you're looking for the creation of a flag pattern based on the rules that we just discussed. And then if you'd like to get involved before the breakout happens, remember the entry was 1 test of resistance here, 2 tests of resistance here, and after that 3rd test of resistance, waiting for a break below, close below candle like we just discussed here. And that, guys, is every aspect that you need for a rules-based trading strategy. And as you can see, guys, if we would have waited on this breakout, there's no way we would have been able to get involved in this trade. I don't like taking breakouts whenever they close this far down unless this market would have pulled back. So the close of our candle would have been right here, and that would have set me up with a very large profit target, which means I would have had a smaller chance of actually hitting my target. And I don't like that, so I like to wait for pullbacks if I have to wait for the break of the trend line, especially if we break the trend line by that large of an amount. So what I'm going to do is actually go ahead and compare and show you guys the difference between catching this breakout as it breaks out and catching the breakout before it breaks out as I did. So here would be the trade setup if we had caught the breakout on the breakout. As you can see, we would have been nowhere close to hitting targets, probably only like 40 or 50 pips actually in the good. Yeah, so 51 pips to the good, and we'd be looking for 213 pips just to hit first targets. And now let's consider this. In this case, we've already hit our first targets, and we're currently sitting at a 1.84 risk reward on the second part of our position. And let's say the market does make it down to our first target from our actual breakout entry. If that actually happens, we'll be looking at a 3.68 risk reward on that position. So guys, which one would you rather have? Definitely the one on the right, correct? So that's why I wanted to go ahead and create this video and give you guys examples of rules you can use in order to enter a trade before a breakout even happens, giving yourself a better entry and a better risk reward on some of your breakout trades. So I hope some of you guys can incorporate this into your trading plan, do some back testing on it, see if it'll work for you. I hope you're able to get some value out of this video. If you did, please click that like button for me. As I said, guys, if you're someone struggling with rules-based strategies, maybe you've taken courses and programs before that overpromised and underdelivered with their strategies, then I would be more than glad to help you out, of course, through these free educational videos here on YouTube. Or if you're interested in learning the rules-based strategies that I use every day in the markets, then you can click the link in the description below or click the link in the top right-hand corner of your screen to the EAP training program, With that program, of course, you'll get the strategies that I use, a full training course, along with emailed analysis on trades that I plan to take 3 to 5 times a week. I wish you guys the best of luck on your future trades. I hope you have a great weekend, and I'll talk to you guys next time.